Hello, good evening. Thanks for coming along tonight. Hope everyone's doing alright. Hello, hello. I need to fix the sound. That'll be next job. There we go. Okay, hopefully you can see my screen. Everything's alright. I'm going to start with the S&P because I was thinking we could see some more upside movement today in this S&P. I was looking at the way we were trading above this 61.8 level. As you know, I have a kind of theory about Mondays that very often the first moves are the wrong moves, and this is kind of what we saw today with this. You know, we had 2 days closing on without being able to close above this 61.8 level, and now with this false break above it and this reversal, if we now lose this daily 50 moving average, I think that we'll see some more downside and this first swing will be done. If we use kind of fib rules, this is the top of the golden ratio zone, so if we break this 50% level in the middle, which is at 44.21, we are likely to continue lower down to 43.91, the 38.2, and potentially down to this 236 fib all the way down here to 4353 in a deep retrace. Now, do I think that this is the high? We're going to see another low? No, I think that more likely this is the first leg higher. It's either A or 1. We're going to see a pullback and then another leg higher before this is done. A bearish Gartley pattern would see us terminate at 44.94, and the best one would be equal measured move, so it would kind of look yeah, a bit like this. So that's what we'd be looking for. So we've got month-end flows as we come into the end of the month. What are month-end flows there? I think they're more applicable potentially in Bitcoin, you know, because we've had a pretty bearish month. If we look at our monthly candle, we've had a down reversal month. When I worked in a hedge fund, you know, you got paid monthly, or you marked everything at the end of the month, you know, and if you'd done well that month, then that's when you got paid. And if you didn't close your position, you couldn't get paid on it. So what you tend to see with month-end flows is stuff that's done well, people will close and take profits on so they can get paid for, and so that's why month-end flows very often are reversals of trends, or particularly trends that have been a strong trend that month. Otherwise you just don't get paid and then you put it back on again, so if you want to. So potentially more downside for the for this if we look at this as a daily candlestick, and if we break 44.21.25, I think we'll see 43.91 and lower, and we will begin either a wave 2 or a B leg for the S&P 500. I always thought, you know, once we got really nastily underneath these daily moving averages, the first time you come back to them, they are likely to be a little bit of trouble. In fact, this is what we're watching for if we're going to be bearish. Before, we've been underneath, but when we've come back to them, we've recovered these daily moving averages and managed to hold above them. So we could see the same here in this, you know, because we've got flat, really, we don't have any trend. If we were to be able to hold above this 50% level at 44.21, then I think that we continue higher, and, you know, potentially a nice fifth wave. 1, 2, 3. I think this is a funky 4, and we'll see another wave higher. Again, the next upside level I'd be looking for would still be 44.94, but we would go up there without that bigger drop first. So it's all down to as long as we hold above 44.21 for me in the S&P. Done pretty similar thing here today in the Nasdaq, except it looks a little bit uglier, and we're back resting on this daily 50 moving average. So a false break higher above this 61.8, and then a nasty 3-day. In terms of a 3-day candlestick pattern, this is a bearish reversal, and yeah, it points to more downside. In the Nasdaq, I think that that's going to happen anyway, because this, again, this 50% level in the middle that would normally be a bit of a pivot, and it's also pretty good support and resistance if we go left here, if we close where we are now, are going to close underneath it. And so that would point to more downside or selling rallies for the NASDAQ. For now, we're just teetering on that 50 moving average. Let's see if we can bounce off it into the close. So these stock indexes are pointing to more downside. The dollar's been a little bit quiet. I don't think that that's quite so helpful at the moment. So how about Bitcoin? I'm going to start with a monthly chart because we're going to see a monthly close this month. And this is a monthly bearish candle, reversal candlestick at the moment. If we close more than 50% down of the open close of the previous month, in terms of Japanese candlesticks, this is a candlestick pattern called dark cloud cover, which is just as good as a shooting star or a hammer or, you know, those pin bar candles. They're just as reliable, if not more so. So to beat that bearish kind of theme, we would need to close 50% up again of this open close here for me, and that would mean closing above 44,319. Now we're not that far away from it. It is doable, but if we don't, this does say that this is our first swing of correction, and this bounce may be over and we'll be starting the next leg of correction. I had hoped that we would squeeze a little bit higher before we started the next leg down, but you know, it's struggling a little bit. If we look at the weekly chart, see if that helps us anymore. If I put these fibs on from the lows, you know, I'd been looking at us holding this 38.2 fib retrace level here, this lovely weekly 20 moving average, and we closed underneath it last night, and now it looks like we're holding underneath it, which is a bit of a shame because this had the look of a three-wave ABC correction. We bounced pretty nicely off it, but yeah, support has become resistance. And you can see, you know, some people were talking about this as a head and shoulders, left shoulder, head, right shoulder. This is the, you know, we didn't see the dramatic break of the neckline, but, you know, for those people that think that that's what this is the neckline. We're holding underneath it. So far, we're holding pretty good support at the 50%, and that would normally, you know, where you, and to be honest, if somebody said to me, what's my favorite trade setup, I would say an ABC correction back to a 50% back any day would be my favorite trade setup. So as long as we don't break the lows here, and I've just drawn this wrong, hold on, there we go. As long as we stay above this 50% level, I think that we can still look to go higher, and this is so far just sideways consolidation. It was a bit of a nasty reversal today. The higher time frame moving averages don't look great, but as you know, we've got a few days and we could still reverse that. So this ABC pattern could play out. Now the first place that I'm going to be looking for is the top of this channel, the daily 200 moving average. If we were to rally from here, and I look for the equal measured move from here, that's up here at 46,385. So, you know, that's quite a nice, at the moment though, we've done one of those three-wave corrections where this level is 61.8 of this first bounce, and that's also a pretty common corrective pattern as well. If we can't close above 44,253, we're a little bit stuck here, which is not good. And we could just, to be honest, we could just as easily go lower from here as higher, which is a little bit spooky. Not good. I think it's very hard to you know, talk about trend at the moment. When if we look, we really have now, this is the 6th day in a row when we've gone sideways. We've stopped going down, we've bounced off the lows. You know, we've tested this 50% level or 40,000, you know, 3 or 4 times, and just haven't gone anywhere. So I'm, you know, don't want to read too much into sideways price action, but I will say whilst we stay underneath this resistance and just keep going sideways underneath this resistance, it's becoming less and less likely, I think, that we are going to get our bounce. And so that's why I've got my eyes on stocks and what happens in those, because they could drag Bitcoin down again. Now, there is one option here, as you know. So normally, if a market is making an impulse wave, in other words, with the trend, it will be 5 waves. So we'll see 5 waves, and the correction will normally be 3 waves. And if it'll be simple like that, that's what we'll see. This wave in the middle should be 3 waves, and then we carry on. Sometimes though, in your corrections though, we'll do this. Remember, the one in the middle's got to be 3 waves. So this is, we're looking at this bit, and so let's do that again. So yeah, we have a rally, correction looks like that, we carry on. Sometimes the correction looks like this. They're equal. Sometimes, you know, we make a higher high and carry on. I think we're seeing the inverse of this here. So let's. So instead of having a drop and a rally and then finish and we carry on higher, what we're seeing is drop, right, and this is still our B leg, so this is our correction, irregular in the middle. And one of the reasons that I think that we might be seeing that is it's very hard to see a relationship between these two swings. It kind of didn't stop quite at the right place, and one of the signs for me that is what we're seeing is if these swings have a relationship or are equal. So if we, for example, get up to 45, this 45,820 level, can't get above it, that's resistance. If we have a rally tomorrow and carry on lower, I think that that's what we'll probably be seeing. And in that case, we would be looking for this swing to be repeated. So from here, so our target would be down here, 35,000. So yeah, those are the alternatives for Bitcoin. But you know, after 6 days of sideways, really we just kind of need a break out of this range. Are we going to break down these lows, or are we going to break higher and break above the 200 moving average? Sideways markets really are the hardest to decipher, but that's what I'm looking at. I really think above the 200 moving average, out of this trend line in this channel that we're in, that we could see a 5th wave higher from here. So this would be 1, 2, 3, 4, 5. That's my bullish view, but I'm really not going to get excited or pile in and buy a load until we get above that 200 moving average here. And I'm not going to get excited and sell a load unless we break this 50%. And then I think that we are potentially in the 3rd swing low, wave 3, or the C leg. So that's where we are with Bitcoin. That's my kind of bigger picture view. I know it's not very conclusive, but again, underneath these daily moving averages, and you know, makes me feel more bearish at the moment than bullish, unfortunately, unless we recover them. Okay, next one we're going to look at is Ethereum. Ethereum's had the same thing kind of today. You know, retested the highs, couldn't make a new high. 6th day of going sideways as we go into month end. 1, 2, 3, 4, 5, 6, and really kind of no resolution. Because of this bearish cross of the daily moving averages, I do think that we are headed lower, potentially to the 200 moving average again, or to retest the lows, unless we can start getting above them. And you know, it's just a sideways range until we do in F, and really not much we can do about it. If we look at a lower time frame, we could say that this is our A, B, and the C leg off the low, and we are potentially about to start a 5th wave lower. That wouldn't be such good news at all. for Ethereum at this point. So, but again, sideways range, we could just very easily retest the lows into month end and then bounce after that. So I'm completely neutral in Ethereum. Bigger picture, I think we're in a bigger wave 4 here. So this is not the all-time high. We just got to let it play out. If I clean up my chart here, this is our bigger wave 4 that we've started. And you know, this, we could make a nice simple sort of 3-wave correction like this, carry on higher. It could be equal, which takes us down here, and then we carry on higher. Or in this wave 4 position, we could make a triangle before we go higher again. I've said many times, I think that we could do this corrective pattern into the end of the year, and then we get our screamingly good buying opportunity. So I'm not sure how this is going to play out, but because this wave 2 is pretty simple, I think that it's more likely than not actually that we could do this triangle, or perhaps a declining wedge. Big picture in ETH dollar. This is a weekly chart of Ethereum. So, and unfortunately, you know, this was really a kind of head and shoulders pattern, wasn't it, for ETH? We've broken down. We haven't been able to get back above the neckline like this. So this is our breakdown point, and this does point to lower. If we were to use traditional technical analysis tools, I really prefer it to be more horizontal than that. But if you measure from the head to the neckline, that's your target when you project it. So if we measure from here to here to here, then our target is down here, 2146. So if you imagine, that would be more kind of, if our target is here, that would point to kind of more of a triangle, wouldn't it? So let's start drawing it like this. So yeah, sideways, but I'm leaning bearish in this one, unless we can get back above, you know, this 20 moving average and this support and resistance around 31.68, today's high. Okay, I don't want to do that. All right, let's look at some charts that maybe look better or set to rally from here. Okay, so got quite a long list of requests tonight. ADA against the dollar and ADA against Bitcoin. So for start off, we're going to do ADA against the dollar. We'll look at the weekly chart here and see how we go. Because one of the things, we've had a really nice bounce off this weekly 20 moving average. This previous low. There's really quite a lot to like about where we have bounced from in ADA. If we put our fibs on from highs to lows, we've managed to hold this 50% level. If we look at it on the daily, it was a little bit messy, but we have held it. The problem is we've got a bearish cross now of our daily moving averages. We've rallied back to them. And whenever you see them, whenever you rally back to moving averages that have kind of flipped or reversed against you, you very often see either continuation lower, or you see a retest of the lows, a deep retest of the lows. And so I think that that's what we're setting ourselves up for, unfortunately, in ADA. So we could, when we come back to this 50% level, hold it, or we could from here continue lower this first bounce. Let's measure it if we were to do that. I think we've got, whilst we hold underneath these daily bearish crossed moving averages, that we've got a date down here at least with the 200 moving average, but I would say the 61.8 next anyway, and that would be 1.8. So if we break 2.05, we will continue lower, and potentially, let's go to a weekly and do this in log scale. Potentially, we have done 5 waves up here. 1, 2, 3, 4, 5. Okay, it's in log scale, so they're going to look a bit out of whack. And if we were to, if this is 5 waves complete, the place we would expect to come back to for support is this previous wave 4 here, which would be all the way back in ADA dollar to 1.0. So we need to be a little bit careful. In terms of a fib retrace, if we measure from the lows to the highs, yeah, that's around the 61.8 level here, isn't it? So that's also where the weekly 50 moving average is. So maybe 1.195 would be a good target. If we lose the support at 1.9, we go to 1.19 in ADA, which is a long way back. I wouldn't hodl it. So, is there any bullish view? Really, I think we need to get back above these daily moving averages if we're going to be bullish. We need to see a higher low here and then get back above this really strong support and resistance level that's holding us down, and these at 2.373. So above 2.373, I would say yes, this lovely three-wave correction is probably over and we're probably on our way back up again. But until then, yeah, it's just not. It's really good support from the weekly 20, but we're going to come back and test it again and find out, I think, in ADA dollar. So what about ADA Bitcoin? Is ADA outperforming Bitcoin? Is it maybe a better bet? I'm afraid at the moment it's looking a little bit toppy, and it's not. If we look at ADA Bitcoin on the monthly, and where we've come back to, so I'm not measuring all the way from the spike high, but the first bounce. These fib levels are sort of okay. Let's see. It's just, where does the high here? Yeah, there is 8788. Yeah, like that's okay. So at the moment, and so unlike the dark cloud cover monthly pattern that we looked at in Bitcoin, which is where you make a new high, but you close more than 50% down of the open close of the previous month's up candle. This is not. This is just a pullback to previous highs and support so far in ADA Bitcoin, but it is a reversal, and so we need to see, is it complete? Correction complete? Are we getting ready to go up again? And I have to say, there's not much in it. But I think if I was to draw it like this, we're coiling up and going sideways. This is usually a really good pattern for a wave 4 in ADA Bitcoin. It's just really hard to see where we are. Normally with a triangle like that, you would expect it to go with the trend. So whilst we're within this range, I don't think there's much benefit ADA over Bitcoin or vice versa. Very short term, clearly, Bitcoin is outperforming ADA at the moment. But yeah, I think we should look to the bottom of this range from here. If we look at it in terms of weekly fibs, potentially this is a 61.8. This 50 should be support. If we lose it, we're likely to come back to these lows down here and this 38.2. So for now, ADA Bitcoin's pulling back in an uptrend. Not much in it, really. Okay. ELA, Elastos. Let's take a look at Elastos. Now, I had my eye on this coin last week. I was kind of really liking the kind of moves it was making. I thought it was getting ready to do something interesting. Let's take a look. Here it is. Whenever you get a double bottom like this, especially a nice swing failure double bottom like this, it does point to you have stopped going down, and in this case it was the weekly 50 moving average, which is a really good place to stop. Let's put my candles on, regular candlesticks. And if we look at our retrace level, I was looking for us to bounce to the 61.8, up to the 38.2, and then hopefully hold this 50% and carry on higher. What's happened here is, unfortunately, we've lost this 61.8 again. It's pretty good support and resistance. So the bullish idea that we had here, or I had here, doesn't look like it's working. It's also, if we go down some time frames, you know, we haven't quite made a new low yet, but the moving averages are all pointing to lower from here. So I would say last chance saloon is a retest of these lows down here, but it really is kind of yeah, it's really last chance saloon, and more likely I think we continue lower from here and to the 786 fib retrace next, which is at 3.19. So yeah, you know, we've been underneath this moving average before, but so it's not completely over yet. We could bounce on a retest of these lows and this daily 50 moving average, but if we close underneath it, then we are headed much lower to 3.19. We're at 4.15 at the moment, so you know, that's more than 20% to give back if we drop from here. So you need a plan to get out. One of them, I think, might be, you know, it's quite likely we will bounce here at these lows, but we would need to then get back above this 4.32 level if we're going up. If we just get back and find resistance there, we're probably going to keep going lower. So Elastos, no bullish breakout, unfortunately. Damn. Okay. Unfortunately. Next off, that one's not working. Let's take a look at Ren. Which was here a minute ago. 1 second. But let's just draw it. We'll just draw Ren. So, how's everyone doing? You know, sometimes it's really hard to trade in these sideways markets. It really wears you down, you know, when it just keeps staying in this range and no breakouts. So in Ren, what we had been looking for, I've drawn my fib retrace levels from this high to the low of the spike in April 21. So the high was in February. So it's basically this year's highs to lows. And these fib levels have been working really well. We paused at this 61.8. We were looking to see if we could break out above it, because if we could, we would have a next upside target here in Ren at 144. And we haven't broken out. In fact, we've just kind of gone sideways again. Slightly lower high. And so, yeah. No uptrend. Somebody asked me, is this an inverted head and shoulders pattern? It is not. Inverted shoulders, head and shoulders patterns, it really matters the location of these patterns. So you need to see an inverted head and shoulders pattern at lows. Otherwise, it's just, unfortunately, consolidation. So an inverted head and shoulders pattern at low is exciting. At the high, unfortunately, not so much. So if we go back to the bottom of this sideways range, we are likely to head back down towards this 50% thing in the middle. Remember, we're doing that 61.8, 38.2 golden ratio thing. So when you do that and you break the 50% level in the middle, this sort of pivot level, then you go down next to the 38.2. This would be our next target if we were to break these green supports. So that's where we go. And sometimes you go back and forward for quite a long time between these, you know, 60 in this 61.8, 38.2 range. can't draw it. There we go. So yeah, support here then at 0.92. If that breaks, it's 0.71. I'll try and do QNT at the end. Hello, Cheetah. Okay. So Ren. I think I've gone out of order. I've done Ren twice. Okay, COTI. Let's do COTI. COTI's a lovely breakout. Now, we had got stuck. One of the really sticky places is always previous highs and lows. And the reason is that you see profit taking there. People who don't know any technical analysis will look for prices to go back to where they've been before. And that's how these ranges are formed. And so we got stuck for 4 days at the previous highs from the start of this year. It looks like we're going to close at a new high. I know we're not at a new all-time high, but it's enough of a high that we're going up. So let's do it again properly from here. And that level should now be support, and we should see new buyers come in. So hopefully, if we're going to fail and if this is another false breakout, I don't think it is, then we would close back underneath this level, 0.6. As long as we close above it, I think that we're really well set to keep going higher in COTI. So where would we go from here? I'm just going to measure a couple of things like this. So 1, 2, and so for me, the next upside target is 0.745, and above 0.745, we should get to 0.88 to 0.9 in that zone. So looking pretty good, but that's our first next short-term target, and then 0.9. 1.42 if we keep going, really keep going, but that's where I'd be looking for next in COTI. Nice breakout today. 0.6 should be support. In fact, that's one of my more favorite charts. So MATRIC, I've mistyped that in the text. The next chart we're going to look at is MATRIC. So let's look at this weekly, because we're looking for MATRIC to find support here. And this is another one where it's a really good level, but we seem to have got underneath our weekly 20 moving average and seem to be holding above it. Today's high is really important resistance at that weekly 20 moving average, and we failed at it today in MATRIC. So a little bit tricky. It's clear that that's what we've got to do, you know, if we're going to go up. So it was today's high, wasn't it? And there's our daily 20 moving average. That's also that's not today's high, is it? I got it wrong. That's the last week's high. Today's high here is the weekly 20 moving average. And if we get above it, our target is then the top of the range and this daily 20 moving average. So sideways range, we've had this big rally green candle, and now we've had 1, 2, 3, 4, 5 little inside bars, unable to break out of the range of this big green candle. If we look like this, so not much to do until we do. I feel like this has the look of a really nice 3-wave correction. So, you know, and we should hold support here and try for another leg higher. If I zoom out, you can see I think that that's a newly minted 200 moving average there that we're holding on to. So a really good place to bounce from MATRIC, but really until we break today's high and then break this 1.24 level, we're stuck just sideways and potentially still headed lower. If we look at the weekly and we stay underneath that weekly, where are we going to come back to? Do you know, this should be it. This should be support. It's so annoying. Normally, okay, so I've got my fibs from high to low. Normally, if you rally to a 50%, you would expect to pull back to 50%, rally 50%, which is what we did, and then it kind of breaks the pattern. You wait for it to break the pattern. So we rallied 50%, pulled back 50%, rallied 50%, and we've broken this pattern to the downside. And so that is, you know, a little bit scary. We could see quite a deep retrace from here. Sometimes it's like an 886. So if I hide this for a second, put this here, like down here at 0.75. Wow. You can see this is a 61.8 we're holding. Yeah, it's really neutral, you know. I'm leaning bearish because of the moving averages, but MATRIC is really neutral. It needs to do something dramatic to say that it's stopped going down now, and break out, start a few breakouts. And above today's high would be a really good start. This double top level that you can see on the hourly. So that's MATRIC. DYDX. Let's take a look at DYDX because we listed this morning in my group. I kind of like this. We were looking for this to kind of potentially hold 19.13, but if I've done it wrong, so if this is a wave 3, the ideal retrace would be 38.2, which is a little bit lower and where these highs are, and so potentially, let's take that away. Potentially, really, the better support I think is at 18.39. So 18.39, we've got a little bit further to fall till we get there, or 50% of this swing, which would bring us back to 17. So those are the two support levels for DYDX. It clearly is in an uptrend. All of these moving averages say an uptrend. I'd like to see this finish on 5 waves, and so I think that this is potentially a wave 4 here. Let's see if it can not pull back to you for ideally 18.39 and consolidate there before it turns up again. So DYDX has started a bigger pullback, unfortunately. Yeah, 18.39. And then we should see 1, 2, 3, 4, 5. Well, if we look at how long let's look at this 2-day correction. So it may be we have a 2-day correction coming up before we turn up again in DYDX. So we've had today, would mean tomorrow as well then, before we go up again. Okay, next one we're going to look at is Ray. Ray. Let's see, Ray. Right, regular candles. I'm just going to... Now. So, you know, we talked about how corrections are 3 waves, and ideally, you know, an ideal correction is an equal measured move where the first and the second swing are equal. So if we were to do that here, then we would have something like this. Right, just down to there, isn't it? And you can see that this double bottom we've got is at exactly at our equal measured move level. If that also lines up with a fib retrace level, it kind of adds even more weight to it. And it is, here it's our 61.8. So when you have this pattern, so we've got an equal measured move, 61.8 fib. If we go up to the daily, we've got no daily moving averages there. Unfortunately, no weekly ones either, because it's quite a new coin. So Ray, we know that 19.16 is important support, and if we close underneath it, we're likely to go down to 7. So 9.16, if that breaks, we go down to 6.8, between 6.8 and 7, and these lows here. We've had what, 1, 2, 3, another 6 days, another one where we've been 6 days of sideways. I wouldn't be surprised at all, honestly, if this just held support here. And nice little 50%, but it would be really nice to see this just, you know, bounce from here and carry on up. So where am I going to get bullish? See on this 4 hour 200 moving average, these lows, I think above 12.14, I think we will be starting a new upswing. We could draw this as a channel, and then our target would be the top of the channel. So here's our channel. So I've connected this low, and this low. And then Elliott waves like equal channels, equidistant. So there's the top of our channel. So if we, you know, if we can hold the lows here, this would be where we go back to in Ray. So I'm not necessarily, you know, these 4 hour moving averages are pretty, pretty ugly. So all I'm basically saying is if we can get back above the daily 20 moving average, we should go back to the top of this channel. That's what I would be looking out for. Daily 20 moving average is at 11.17. I think perhaps a little bit higher above 12 would confirm it. So yeah, I'm looking for Ray to make a base, not make a new low, and rally from here. DOT. Unfortunately, DOT is one where I feel like we've got a little bit further to fall. Because today, let's see this way. Do you know, all of these moving averages are all bunched up together, going flat and sideways. So there's really not that much of a trend. Really, is there? We could potentially have a head and shoulders pattern with a sloping neckline. That's a little bit lower than where we are. And if we break down, so if we say this was our first swing lower, this is our correction or B leg. If this is finished and we break underneath here, our target is going to be, first target is going to be down to 14.4. That's rough. So let's see. Do you know, I much prefer, I don't really like head and shoulders patterns with sloping necklines, and I always tend to revert back to horizontal supports. So I'm going to say in this that really the strong horizontal support is this 50% level here at 24.57, and that if we break here underneath this 200 moving average, that's where we will retest, and it is really strong support. And I would only look down to this 14.42 target if this support broke. So still in a correction in DOT. I don't see it being ready to go up again. I would have liked to see some really bullish price action off this 200 moving average. We just haven't got it. Maybe we'll get it from the retest. Maybe we'll hold it tonight and we'll see a big, you know, strong move. That would be interesting, wouldn't it, to jump in on? But for now, back underneath these moving averages and holding underneath them keeps me a little bit bearish, unfortunately, for DOT, and a retest of the lows coming. Okay, I've already done Ren, so I won't do that one again, but I'll do Neo. Neo's got lots of fans, obviously, with the news, so let's tidy up here. Now, Neo reached one of those levels where potentially, you see, none of these. It's been very frustrating that really none of these fib levels have worked very well in Neo. We could argue, if we can turn higher from here, that we have made another one of those inverted head and shoulders bottoming patterns. I kind of like them to have better symmetry though than this, and I feel like this is a very skinny, lightweight left shoulder, and we're building quite a big right one, and that when it's out of balance like that, they don't kind of tend to work that well for me. However, let's just, if we measure the swings, we can say that this 38.45 around this level is pretty good support. If we lose it, if we make a new low, we're going to go to 29.53. And that's quite a long way down. Yeah. So important that we stay in this sideways range. So let's take everything away, and this is a good time to be neutral and kind of not overloaded in Neo. If we break the lows, we're going to look for these lows to hold as support, and we go up again. And I think back above 44 and this daily 20 moving average, back above 44, probably 0.5, that would be a really nice bullish trigger for me. Now, there's nothing wrong with buying the lows if you see it bounce off it. At least you know where you're wrong, and you know where your first target is. It's the top of the range. But unless we break out of that, we're not going up again. So time to be patient. We really could make another swing lower in this one as well. Okay, let's take a look at Luna. Luna's one of my more favourite charts. On the weekly, when you look at this, there's what's not to love about this really. We're consolidating above the previous highs from March. This is our weekly chart. We're consolidating above our weekly 20 moving average. Every time we dip down here, boom, the buyers come in. It's a really kind of good look, isn't it? So here we are in our sideways range, trying to break out. It would be cool if it would make a triangle. It's a good sign of a... I don't think it will. I shouldn't have connected that low. Wait 1 second. Let's just count where we are. Now, we could say that this is 1, 2, 3, 4, 5. A lot of Elliott purists would say that we should not have come down here into wave 1 territory with these tails. If we look at it on the daily though, I'm a big fan of Robert Miner, and he says if you don't close within that territory, that you could have just a look inside. And if you can see, we didn't have any daily close in this territory. We really just had a look underneath. So for me, this could still be, this is a wave 2, nice and regular ABC, and this could still be a wave 4, which would mean potentially a triangle or a wedge or that kind of pattern before we go up again. So clearly a break of this upward trend line and new highs would mean Luna's done. But if we look at how long, very often waves 2 and 4 are equal in time, if not price. So if we look at how long wave 2 took, that would take us to the 12th of November. Gosh, that's quite a long time. We might not take that long, but I think we're going to do a correction on this scale and go sideways here in Luna for a bit. So it was a really nice bounce today. It's not new highs yet, and it could very, again, if we've just gone 3 waves up and we turn lower from here, I'm going to be looking for back to the bottom of the range in Luna. So I'm not necessarily, there's a good place to have your Heiken-Ashi on. Let's watch and see. It has rolled over now. So a potentially lower high and swing lower beginning here for Luna. So I'm neutral. I think Luna goes sideways for a bit before the next big swing higher. And I do think we get that next big swing higher as well. Okay, let's go back and look at some more. Okay. Let's look at KCS. Actually, I might have a chart for KCS. Let me see. No, never mind. Okay. Now, when you, at first glance, when you look at this, this looks like a pretty good sideways range, doesn't it? We've had a nice double top here in KuCoin. And here we are back again at the 200 moving average on the daily. which was really good support in May, and it was really good support when we tested it again in June. So is it going to be support now? Is this a big wedge, or are we going to break it and head back to the lows? That's the key question. Let's measure these two little swings here and see if there's any relationship. And let's measure this one as well. I think while we, you know, the obvious one, isn't it, is where is the bottom of the range with this double top. Is it too obvious? When I look at this on a 4 hour, you know, this really does look like a bear flag, doesn't it? So we'll say if we break down, if we break these lows, then we're headed back to the bottom of the range at 8.19. One of the things I look at, so let's take all these lines away, is just the moving averages. We're in a, you know, our moving averages have gotten above the 200 on this 4 hour chart. This looks like a bear flag. I'm waiting for this to break down. Really, this is a sell scenario for me. And I think we've got a little bit further to fall, unfortunately. So what have we got to do to turn this around and become a bottom? Well, when you get a double bottom or triple bottom like that, you know you're going to have a run at least back to the highs here. HV says 50 dot would be a gift. Yeah, the problem is if we get there, because if we get to all of these ideal buy levels, because the market is self-destructing, nobody wants to buy them there. Like, nobody wants to buy them there. That's the problem. Okay. So, bearish view is this is a bear flag. Bullish view is, let's say that this is just a little ABC correction. This is an important low and we're going to go higher again. Well, if this was our first swing of correction, here's our B leg. We'll do a second one, equal measured move and turn higher again. And so if that's going to happen, I don't know, you don't want to miss it. Put your trend line across these highs, put an alert on that or something. That would tell you when it's breaking to the upside again. What about Litecoin? Do you know, Litecoin is just step for step doing what Bitcoin and Ethereum and ETH, they're all doing the same thing in links to. I feel like for me, you know, Litecoin is like my confirmation chart. If I think Bitcoin is doing something, Litecoin will usually do it first. So if I think Bitcoin's going to go lower, Litecoin will usually do it first. And it is a little bit here as well, isn't it? So that's gone. Let's just quickly. Yeah, Litecoin is very good at moving first. So I think we could see a deep retrace here. $133 probably, if not lower. You know, this is downtrend. We could do a proper retest of the lows in Litecoin. So yeah, not a buy for me yet. Back above 155.8 would be, tell me that it was moving higher, that it was in an upswing again. That's perhaps what I would look for. Okay, let's go back. So this case, yes, neutral. I'd like to see it break this upper trend line. Qcoin, you know, nothing going on really. There's nothing. It's just sideways market, consolidating, doing a little bit of back and fill. Let's look at FIL. FIL. It's not here. Let's have a look. So fill. Now, start with the weekly chart. for me, when I look at Fibonacci patterns, okay, so I've ignored this low and this spike, and we've got this swing, mainly because the fib levels are working really well. The 236, the 50%, and so on. So normally when you bounce from an 886 fib like this, your target would be the 50% here, and it's in 3 waves. So if this was our first leg, and we were to bottom here, that would take us exactly to our target. So sometimes you can reverse engineer this little trade just by measuring from the target to where. And so, yeah, I actually really think Phil's got a good shot at this being a good place for a low. A really good place for the low, because it would take us to our target with the exact pattern that kind of want to see. So this daily candlestick, it's pretty bullish. It's a bullish inside bar. It's got to be an inside bar because it's open and closes inside of the range of the day before. But it's really bullish because it's more than halfway up of the open close. In fact, we're almost going to close at the highs, aren't we? So, yeah, nice bullish candle reversal. So a little pullback here. I'd be stalking an entry, I think, in Phil. So... and I'd be looking to flip some of these lower time frame moving averages. So we've just done it here on the hourly. So this is what I mean by flip. So when you're in a downtrend, your 20 is underneath your 50. When you go into an uptrend, your 20 is above your 50. So we flipped it bullish. Now we want to see a nice 3-wave pullback, and we're going to have a nice buy. I'll try and do next though, and try not make it too late tonight. So that's what I'm looking for in Phil. Back to 66.6, but I think that may not be the level. So we have flipped, and this for me, yeah, this Phil has a lot of potential. Now, as you know, everybody knows I love fibs. So one of the things that I look for confirmation is above is the 236 fib. I like to see it tagged, and I like to see a reaction that tells me I've drawn it right. And so when I look at this big move lower, about second move lower like this, I think back above this 236 fib level would, from the high here, would confirm the bottom and the reversal. So that would mean back above 66.56 in Phil US dollar. So yeah, I think that we have reached a level where we could really rally very nicely in that one, and I would keep your eye on it because yeah, our upside target is here, of course, at 129. So target 129, and we are at 58. So that's a nice trade if we can do it. Don't see why not. I am going to look at AVAX. So AVAX now. I'm going to look at this with regular candlesticks because let's see this. I wish it would stop raining. One of you people who complained about the heat, this is your fault, it's raining. Okay, potentially, look, if I measure from this low here, we've reached one of those corrective, you know, in new coins you very often see this. I know you probably think AVAX has been around for a while. So, either way, we are just, I think, really in an uptrend, consolidating, going sideways. This was although this nasty reversal candle had a pretty nasty range, let's just take this away. Whilst we stay in the top half of this candle, and don't close underneath it here on the weekly, we are still bullish and looking higher from here. We paused at a 1272. I don't know why TradingView won't let me draw it. The 1272 is here. Our next upside target is this 1.618. But this is bullshit because I need to be able to draw it. Oh. You know. No, I can't find one. Okay, let's go back again. Here we go. There's our 1272. That we haven't been able to close above. And if we do, that will say the next leg higher is underway, above 74.17. Okay, so we are a little bit bouncy today. Look like we're set to come back and test it, but we need to get it back above 74.17 and then hold above it for us to be going up. Do I think that's possible? Yeah, definitely I do. I think that this again looks like a pretty nice three-wave correction. My problem is here, when you say to yourself, oh, are we ready to go yet? Or do we have to come all the way back and test, you know, this previous high or the 200 moving average? This rally looks like a three-wave correction, so that's a problem, first off. And so if I look at this on an hourly, now it looks even more like a three-wave correction, which says not a new upswing, just a correction. This third swing was 61.8 of the first swing. So back underneath, it's looking a little bit of a problem, isn't it? Trend the market. I do requests, and I say which my favourite ones are when we look at them, but I have a strategy group. We look at the market every day, sometimes twice a day, and yeah, I generally do talk about my favourite ones. Monday night I do tend to do a big request show though, so that's just my format for tonight. Okay, horrible sideways market this week though, isn't it? I should stop complaining. This one is not so much. This one is in a really nice uptrend. We are holding above the daily 20 moving average. So if we are going to continue our uptrend, I want to see us back above 74.17. And I'm just a little bit nervous about how this rally is unfolding so far. It looks like a three-wave correction, which would suggest lower before higher. So be a little bit careful in AVAX. Not a great place for new longs right here at the moment. So FTM, what a superstar FTM has been. Let's go and take a look at that one. So yeah, we just do this Monday nights. Okay, FTM. So this was one of my favorite charts at the weekend. I was really hoping after a three-wave correction that this might be over. We might be ready to go back again. And I really just like this kind of swing failure retest of the lows here. However, since then, like normally, if you have a correction which is choppy and overlapping, when you start a new upswing, you like to see sort of strong upside moves to tell you that the, you know, mood music has changed and we're going up again. Haven't really seen that, unfortunately, in FTM. This was an ideal correction where it's swing and here's 61.8, but we've really struggled to rally. So let's go back to basics and so the problem here may be that we've just here's the problem, you know, when your moving averages all bunched up like this, sometimes you just do an extra leg and you retest the lows. So if this was just ABC up for the first leg, and now we're going to do this down, and then we do it again, you know, to the 50%. You know, we could go sideways for some time, and because it's, you know, 3 waves, then, you know, this is a little bit of a, yeah, we're not going up yet, let's put it that way. Our moving averages are flat. We need a breakout of this sideways range. So let's look at that. So we're going to say the bottom is this 4-hour 200 moving average, and the top are these highs, and we just really, it's coiling up, and we need a breakout from this narrowing range. And if it's lower, expect a full retest of the lows down here, if not lower. And if we break out higher, we'll climb our way back up the fibs again, and hopefully this turns into our next leg up after a big correction. So I haven't got log scale on. Let's see how far we've come back, because I was going to say these markets love a 50% pullback, but that's where we've come back to. And normally if you do a 50% pullback going that way, you would at least see a 50% the other way. And we haven't got there yet. So, you know, that puts that 50% into perspective next, doesn't it? In fact, I would say we would have a bearish fail if that's where we got to and reversed at 1.454. It should be enough of a move that you don't have a losing trade. It's just a scratch trade, right? If we break out. So watch out for resistance at 1.454. Okay. So let's look at the next one, which is, so FTM down. Yeah, I thought we were going to do better with this one. But, you know, if everything else is heavy, then there's not much it can do. Let's save this and look at step. Now, this is another one in a big coiling up. So, lower high, higher low, lots to like. Here we are in the middle of the range. Normally I would say, gosh, above this 200 moving average, support, resistance, gosh, we should look for this to be support. One of the things that is making me a little bit nervous is this is potentially, you know, one of those 3-wave ABC corrections, isn't it? So let's see where we rallied back to so far. 38.2. That's okay. It means if we lose this, we're likely to come back. Remember, horizontal levels usually trump, so we are likely to come back to this 236 fib at 0.8055, and then see if we can go higher from here. We are at the moment just balanced on these previous highs, but we may come back a little bit further, or we may just rally from here. Flat 200 moving average on the 4-hour though does make it a little bit you know, trickier, slower, but I like this one. I like on the daily how we've made a new high, how we are trying to close above the 20 moving average. I would only not like this if it just collapsed and kept selling into the close tonight and closed back underneath it. Then I wouldn't like this at all. But at the moment, I think it's got a really good look, and it's pulled back to really close to ideal support to turn up again from. So not long to wait and see if we can go up again. Hi Jay, I'm doing the list. If you look at the text under the video, I'm doing the list of requests there first, and then I will try and do those other requests at the end, AR and Nexo and so on. Okay, so step finance, pretty close to support if we're going to keep going higher. I'd like to see it turn higher from here. Solana, so this is one. again, this is one that I looked at over the weekend, and I really kind of like this. You know, this has been a very nice three-wave pullback to the 50%. I was looking for this to rally and get back above this 20 moving average, and that, you know, would be a sign that 1, 2, 3. I'm looking for a really strong wave higher next, but we haven't been able to close above this daily 20 moving average. Instead, we're all a little bit, again, sideways. If we are going to, this is right where tonight, with these hourly moving averages, this back test of this fib, this is where we should really rally from. So looking for it to hold. If we don't, then this is not the pattern that we're in. We're not in a new upswing. So this is what I'm looking for it to do, right? But if we can't, we are coiling up, making another triangle or wedge at these lows here, and that would point to one more swing lower before we go up again, if that's the pattern that we make here. These triangles, these wedge consolidations, when you go sideways like this, they generally break with the trend. So the trend clearly is, short-term trend anyway, is lower for since the beginning of September. So if we do make one of those triangles which has 5 waves in it, then we would expect it to break lower with the trend. So that's what I'm watching for. Hopefully we'll hold support. This is not, we'll hold support, we'll turn higher from here, up we go, and then this is not obviously the triangle that we thought it might turn into. That's what would be the problem. So Solana, hoping we hold support here and turn up. Let's wait and see. Now, if we do, where are we going? Where are we? Well, I've had a couple of options with this. Let's do this. So we'll measure. Yeah. So it's possible, I think it's possible if we don't break higher from here. I was looking for this potentially to be 1, 2, 3, a little 4 and a 5. And if we do continue higher here, between 265 and 280 would be where we go next. But if we can't and we end up breaking these lows that we looked at 120, then I think we're in a correction on the scale of this one, and likely to see, you know, how long did this one take? Yeah, a few weeks of sideways before we go up again. So is Sol a bull flag? I would hope so, but we won't know until we break higher, unfortunately. Now this triangle pattern here at this position isn't a bullish flag, but this would be. Like this. Take my log scale off. Trend lines don't work in log scale. So let's extend that. Potentially, if we draw this as an equal channel, that's where we are at the top. Potentially, it was so close. And so, okay, I don't know. After a whole week of sideways, who knows? Like, flip your coins, draw your clearly draw your parameters or ranges, and then see if we get breakouts. Let's look at Link. So I drew this line because that's the line I wanted it to break above if we were gonna go higher. So my line for Link Link is like this. So like this, and then something like this, you know. So that's what I've been looking for in link. The problem is, I think we may be a declining wedge as well. The problem is that whereas before we were supported by these moving averages on the daily, now that we are underneath them and they are all lining up bearish, we've got a lot of work if we're going to be bullish and see link going up again. In fact, unless we can, the path of least resistance is again lower. So we want to be above that daily 200 moving average that you can see at the top of the wedge. Otherwise, yeah, this isn't good. Points to more downside. So this is a classic bear flag. Here's our flag pull, here's our flag. So we measure the pull, project it from the breakdown and so on. And this may be another one like Bitcoin, where if these two swings don't really have a relationship, and if we measure them, they don't really have a relationship. So either we go down to the equal measured move level where they do, so the downside target level would be 19.57, or we are instead doing an irregular correction. So this is our A leg, and then this is our B, and then we have our C leg, final leg. So yeah, I do think there's room for us to squeeze a little bit higher to the top of this channel. But if we break down, as in we break the lows of this bear flag, let's do it this way, then down we go. So yeah, this is a bear flag look, but it's not down until we break the lows. So it's just consolidation. So not a bull flag. This is a bigger bull flag here. This is a short-term bearish flag. Okay, that's link, SHIB and Atlas. So SHIB, Shiba Inu. Now I like this one. It was outperforming. And then it couldn't go any further. Now, one of the reasons that I got bullish over the weekend was I really liked this close above this daily 50. I thought on pullbacks it would hold and we could keep going higher from here. And when, excuse me, when I zoom out and I look at this, like, how is this not a lovely bottom? You know, it's got to be. Are we building a base here or not? Especially with this lovely swing failure pattern here. You know, here we are. Really, this is what we're doing, isn't it? Now, we are back again within the range of our wedge. No breakout. Textbook A, B, C, and that's where we reversed. So because this is an A, B, C, the minimum retrace should be the 786, and we're not there yet. It's down here at 604. So yeah, I think we have got further to fall, and 604 is the next place that I am looking for SHIB to find some support. 604. Not a buy yet then for me. I really thought we could, here's the thing, what I was looking for. I was looking for us to hold above this daily 50 moving average, hold these moving averages on a pullback and keep going higher. And it didn't happen. So, didn't happen. So that's that one. I'm going to save that. Let's look at Atlas. So I always like to look at the fib levels and see if they're really being respected, and I don't feel like they are so much in this one, to be honest. So I'm probably going to bin them, and Let's just make sure there's nowhere better. That's not the same. So here we are. Normally I'd be quite excited to see this because, you know, when you get a double bottom or you go sideways like this, you stopped going down. And when you are in a pullback, before you can go up, you have to stop going down. And Atlas has done that. Now we want to see, has Atlas got it to break out here? Because otherwise this is just another consolidation where the most likely outcome is that we, you know, break lower with the trend, unfortunately. So, holding underneath the moving averages, setting up for a retest of the lows doesn't make me want to buy Atlas US dollar yet. I can't find the fib levels. Well, I can, but I can't really see that they're being that accurately respected. But if I was going to lean on them for where we go next, I would say that this 786 fib level here at 0.06119 would be where I'd be looking next. 0.06119. Okay, let's look at AR. Now we do look at this one, as you can see, because I've got scribbles on it. In the group. Now, this did one of those reversals at an 886 fib level. And when you do that with these harmonic patterns or the fib patterns, your first target, this is a bat pattern, they retrace really hard. And your first target is this 50% level, which is where we stopped initially here on the weekly. It's a bit rough. If we continue underneath it though, then we're likely to see this 236 fib, which is down here at 23.86. Now at the moment I'm not panicking, but if we were to break this daily 50 moving average, which was really good support here, then I think that that's at least where we're going. We'll retest the lows at 34.16 and we will probably go to 23.86 in another leg lower. So let's see if we can hold these 50 moving average and rally from here. That's what I'm looking for anyway. Okay, and double bottom tonight would be a good look, wouldn't it? In AR. Otherwise, you know, you got to say we're neutral. Big rally, 1, 2, 3, 4. You know, in the last 6 days we've just gone back and forward sideways within these daily moving averages. Haven't really made any kind of decisive trend move yet. Okay, AR, I'd love it if we bounce from here. Back above this daily 20 again, I think would be a really good bullish move. I will look at Nexo and Woo. Okay, Nexo. Let's try Phoenix. In fact, let's try the other one. Maybe a more chart history. All right, let's start with the weekly. Really sharp drop, haven't we? And then, okay. So from this 786 fib, it's a really good place to reverse from. Let's put it the first way. So if we bounce from 0.9721, which we have already, and we get above the 61.8, so when you reverse at a 786, proof that you kind of reversed is at this 61.8. You can see the first day we came back to it, we had 2 days of pullback, and then we carried on higher. Was this move a nice little ABC. Yeah, it was. So if we're going to be bullish, which we weren't, we would have had to close above 2.2037. So this whole rally was ABC. Now we're looking for ABC back and then 3 waves up again. So next, so for me, not a buy. Not a buy because of this failure at the equal measured move. It says this whole rally from the 21st of June was a bounce in the uptrend. Unfortunately, yeah, just a bounce in an uptrend. Potentially we are looking for a retest of the lows. Not the all-time lows, but the lows of this year, I think in June. The June lows at 0.97. So, yeah, damn it. Let's look shorter time frame. See if we can see anything optimistic. Well, this is quite a 4-hour little pattern. Yeah, not really a breakout until we break. Let's take these highs and lows. It's just not a breakout until we break out of it. Double bottom, tough resistance, and we've been in this range, gosh, 7 days. 7 days. 7 days of 4-hour sideways. My sympathies to everybody in Nexo. Okay. I hope that helps everybody. I will see you tomorrow in my group, tomorrow on Twitter, or sometime around. Thank you very much for coming. So let's recap Bitcoin before we go, because really it's all about Bitcoin. If Bitcoin can't go up, nothing much else will except a few odd kind of wonky ones. So in Bitcoin, we've done our 3 waves down. We need to break above the daily moving average at 45,500 really to be going up.